On Business Incorporated today, Egypt to get $500 million loan for food security. Spain begins gas supply to Morocco. In South Africa, consumer spending for the second quarter of this year plummets. It's the midweek edition of Business Incorporated here on Channels Television. You're welcome. I'm Amy John Mekwa. Let's get into business now, starting with the markets in Africa. It kicked off the midweek trading session mostly negative at intraday. Nigeria's main index managed to stay out of the red, just to 0.01%, still below that 52,000 points level. Meanwhile, South Africa's benchmark index is down almost 1% at intraday. Elsewhere, Egypt's index traded lower at 0.82%, while the Nairobi Stock Exchange closed Tuesday positive. It was up 0.87%. Over to the Middle East now, where sentiments were also mostly negative at intraday. Abu Dhabi index dipped 0.28%. Dubai also was down almost the same amount, still within the region. Saudi Arabia's index was the lone gainer. It was up almost 0.5% at intraday, while the Qatari index dropped almost 0.5%. Let's go to Europe now. The EU has agreed to end sales of traditional combustion engine vehicles by 2035. The 27 member nations needed 16 hours of negotiations yesterday and today to cement the deal, which includes an exemption for vehicles running on future carbon-free fuels. Well, we have joining us to tell us more, Stephen Bursley now from Berlin. Hi, Stephen. Good afternoon. How significant is this decision for the bloc?
Well, this measure was introduced last summer, but it proved very controversial yesterday when it had to be approved by environmental ministers from across the EU. It's not a done deal yet, but it still has to be approved by the European Parliament. But it looks like if it has the approval that it received yesterday, then it's more than likely to become law. Now, this is one of several policies that was discussed and agreed to yesterday that's part of the EU's path to climate neutrality in 2050. These are policies in which the EU ultimately has to raise the costs of using carbon or prohibit altogether old technology, or current technology, I should say, that is very dirty in terms of carbon. It has to do that while making it politically palatable. That's very difficult, I should say, when you look at 27 member nations, all with different speeds of economies, with different speeds of demographics, national incomes and such. So that's sort of the trickiness of any particular policy.
And I guess that trickiness also leads up to some controversy, especially as the bloc tries to win itself of Russian oil and gas.
Well, in this case, it was controversial most simply because it relates to cars, something that people use every day, that people have strong feelings about, they have strong connections to. And in some nations as well, such as Germany, there's also a hefty amount of politics tied to it. Germany is Europe's largest car market. It's also home to some of the world's largest car makers. You think of BMW, Audi, Volkswagen, of course. So there was a lot of discussion about this, even within the Berlin government itself. It split the three parties that make up the current government. And so there was no guarantee that Germany itself was going to vote for this proposal to end carbon-emitting engines by 2035. And what finally pushed this through was compromise, and compromise is the key to any EU decision. And so what was eventually decided on was that the member states would take another look at this issue in 2026, basically see that they are on the right path to this 2035 decision. And also that they would take another look at that they would allow the inclusion of carbon-free fuels to be used in internal combustion engines. That is, those fuels that will not release any carbon emissions as well. So they would still adhere to the idea of no carbon emissions, but they would provide a way for internal combustion engines to still be used. Now, those fuels to this point are not well developed. They're not mainstream. They're very expensive. So there are a lot of question marks about how realistic that is. But in this case, it did provide a way to compromise.
Yeah, and looking at the markets now, earlier the euro was falling against the dollar. What's it looking like now?
Yeah, in this case, this appears to be tied to comments yesterday from the European Central Bank President Christine Lagarde, saying that any rate hikes coming this summer would be gradual and not too strong. And that, of course, sent the euro down against the dollar. Hiking interest rates tends to strengthen a currency. There are a number of rate hikes expected in the months ahead in the U.S., I should say. That's only going to strengthen the dollar against all currencies. But there had been hopes when the ECB said that it was likely to, or that it was going to raise interest rates in July. There's still a lot of question marks about how high they're going to raise them. So we're seeing investors in this case trying to adjust their expectations. Their eyes are going to be on remarks today by Christine Lagarde again, but also Jerome Powell, chairman of the Federal Reserve. They're both speaking at an ECB event today, and investors are going to be looking for all signs about what their future prognoses are for monetary policy and how it could affect their investment decisions. We've seen that inflation is really sort of coming to the forefront again as a market-moving issue. We know that some of the announcements recently from China that certain COVID restrictions would be loosened had driven Asian markets recently. That's given way to more concerns about recession, especially with new consumer data out of the U.S. So that's what's driving markets today. We saw European markets initially slip right out of the gates, and that could go further as we see more data that's not too positive on the economic situation.
All right, Stephen, thank you so much for that update. Have a great day. Let's move to London now, where Juliana is standing by in our studios back there. Juliana, good afternoon. UK victims lost £1.3 billion last year. This is like a surge in offline. I mean, I don't want to say, because it's this year that is the year of the squeeze. So I can say the year of the squeeze is sending people to illegal activities.
Absolutely. Good afternoon, Innie. I suppose where there's money, there's always going to be people that want to steal that money, and that's pretty clear in this data. £1.3 billion, that's an awful lot of money, and that is the amount that was lost by UK individuals to online scammers. And I think if you are watching from the UK now, I'm sure you've all seen, I've definitely received text messages, emails from people that are impersonating the NHS or your bank, or your even higher institution. It's a huge issue, and it's one that the banking industry, as well as the government, are asking online mechanisms to do much more to tackle it. Now, fortunately, about £272 million was returned to victims, but there is still so much more that is outstanding, and I believe the difficulty is whether or not you can actually prove that you were scammed. So constantly, I believe there are advertisements in the UK urging people, particularly the vulnerable and the elderly, just not to click on sites. And one way to do it is obviously if you're receiving an email and it says Barclays Bank, just to click on that email address to make sure it is actually coming from Barclays Bank, not an XYZ email account. But it is a huge issue that the government said that they are going to try and tackle in the months to come.
Yeah, thank you, Juliana. Thank you for that tip. I think that's one of the things I do too, to be sure of where it's actually coming from. But let's go to the markets now. Discount retailer B&B, they had a drop in sales for the first quarter. How are investors reacting to this?
Yeah, so B&M is a budget discount store in the UK. I believe it's a European store, but they've got about 750 sites in Britain, and they have reported their first fiscal quarter results, and they're down by 9%. I think this has shocked investors because, of course, we know that we are going through the year of the squeeze. Cost of living currently at a fresh 40-year high. So a lot of people are changing their consumer habits and going to cheaper stores. Seems as if it's just not B&M. And I think this is really disappointing to bosses because they decided to try and transition from a bricks and mortar store to compete with the online competitors. They tried to jump in on that kind of pandemic online consumer spending surge. So they have adopted new approaches, which includes click and collect, an online delivery service, but it's just not been enough. So I think there are concerns about the future of the FTSE 100 store to make sure that they are fit to work within the market. But in terms of the market, so they're pretty much in the red at intraday. We know that NATO are convening in Spain. We just had the G7 gathering in the Bavarian Alps in Germany. And of course, now lots of attention is being refocused onto the ongoing illegal war in Ukraine and what this means for the wider global economy, particularly when it comes to gas supplies. I think that's the threat for investors at intraday. The all shares down 0.69%, the FTSE 100 down by 0.5%, and the FTSE 250, the domestic market, that's down by triple-digit figures, 1.68%. In the currencies market, the British pound also trading down against the US dollar by 0.20%, down against the euro by 0.27%, but up against the Japanese yen by 0.17%, Innie.
Thank you so much, Juliana. Always bringing it right there for us. Enjoy the rest of your day.
You too. Thanks, Innie.
Let's go to Asia now. Hong Kong shares led losses in Asia after Wall Street's negative lead. Consumer confidence in South Korea and Japan fell. Hong Kong's Hang Seng Index declined 1.88% to close at 21,996.89, while the Hang Seng Tech Index dropped 3.27%. Alibaba stock in Hong Kong dropped over 3% and Meituan fell 2.31%. In South Korea, the Kospi dropped almost 2% to 2,377.99, while the Kosdaq shed almost 1% to 726.35. South Korea's Consumer Sentiment Index fell, standing at 96.4 for June. That's down 6.2 points from May's prints. We'll go to the U.S. now. Stock futures fell slightly a day after the major averages made a failed attempt at a bounce. Futures tied to the Dow Jones Industrial Average edged down 17 points. S&P 500 and Nasdaq 100 futures dipped 0.2% each. Investors are looking ahead to comments from Federal Reserve Chairman Jerome Powell at the European Central Bank Forum. Earnings from Bed Bath & Beyond, General Mills and Macromic are also on the deck. Well, let's have Maria Bird now. She's in Washington, our correspondent there, to give us details of yesterday's trading.
The U.S. stock market closed lower on Tuesday for the second consecutive day in a row. The Dow Jones closed at 1.56% down. The S&P 500 closed at 2.01% down. And the heavy tech Nasdaq closed at 2.97% down. Consumer confidence is at an all-time low, the lowest it's been in a decade, as many are questioning whether or not the U.S. economy will be able to rev up and if the job market will continue to grow. There is much speculation that it will be a downturn on the economy. Many investors parsed through the consumer expectations of a lowering of the economy and were also very skeptical as if the monetary policies will not continue to tighten over the weeks and days to come.
Thank you so much, Maria. Let's go to the oil space now. Prices gained for a fourth straight session with tight supply worries offsetting concerns about a weaker global economy. Brent futures for August advanced 0.5% to $118.61. Yesterday it was about $111. The August contract will expire tomorrow, and the more active September contract was at $114.06 a barrel, and that was an increase of 23 cents. U.S. West Texas Intermediate crude futures advanced 0.7% to $112.60 a barrel. Saudi Arabia and United Arab Emirates have been seen as the only two members of the organization of the petroleum exporting countries, OPEC, with spare capacity to make up for lost Russian supply. In the metals market, gold prices treaded water as bullion struggled to break out of range-bound trading. Spot gold was down 0.3% at $1,814.27 per ounce. U.S. gold futures also dipped 0.3%, $1,815.70. The US dollar rose 0.1%, making gold more expensive for buyers holding other currencies. Let's take a break now. When we come back from that break, we'll settle on the African continent here on Business Incorporated. Join us then. You're welcome back. You're still watching Business Incorporated on Channels Television. Let's start off in South Africa. The country's consumer confidence plunged to -25 in the second quarter of 2022. That's the lowest in more than 3 decades, barring 2020 when the COVID-19 pandemic hit, as consumers tightened their purse strings. And factors spanning from the impact of COVID-19 related restrictions to soaring commodity prices after Russia's invasion of Ukraine, among others, have hurt sentiment and have curbed spending across the globe. The Consumer Confidence Index, sponsored by the First National Bank and compiled by the Bureau for Economic Research, crashed from -13 in the prior quarter, as the second quarter of 2020, which had a reading of -33. The index measuring the appropriateness of the present time to buy durable goods like cars, furniture and electronic goods also edged down, showing that consumers did not consider it a good time to make big ticket purchases. In Nigeria, with Lagos State emerging a mega city and sustaining its status as the commercial capital of Nigeria, the security of lives and property is a critical factor for the government's attention. The best way to accomplish this would be through a public-private partnership with the state government. This is the opinion of the president of the Lagos Chamber of Commerce and Industry, Dr. Michael Olawale Cole, during a meeting with the Lagos State governor.
Nothing must go wrong in Lagos for Nigeria to exist. If you look at the proportion that Lagos GDP occupies in the national GDP, nothing must go wrong with Lagos. And that's my appeal to Lagos. That's my appeal to Nigeria. So those who think that Lagos is just like another state, let them just divide the GDP of Nigeria by 36 and see the average. And look at the GDP of Lagos State. They then know how important Lagos is for the economy of this great nation. We want to thank you. We'll keep on engaging your Office of Overseas Affairs and Investment, the Lagos Global, and several engagements we've had with you in the past on the social purpose institutions, that the ones we've established to implement specific mandates in the areas of employment, creation, tax administration, security, and small business empowerment. Lagos State has continued to be the investment haven for foreign investments coming to Nigeria. Most recent data from the National Bureau of Statistics show that Lagos State alone attracted $1.11 billion which is 71% out of the $1.575 billion in the first quarter of 2022. You can see how important Lagos is. Over 70% coming to Nigeria is into Lagos, passing through Lagos for Nigeria's benefit. Our concern about the composition of Nigeria's capital importation is that the proportion of foreign direct investment is at only 9.5%, needs special attention and calls for immediate actions towards addressing critical issues affecting our business environment.
Well, the Lagos State Governor, Governor Sanwo-Olu, who was there, believes that the role of government is obviously to make life better for its citizens. And in his response at that meeting, speaking with industry players from the Lagos Chamber of Commerce and Industry, he highlighted some of his administration's achievement in the area of infrastructure.
We proudly want to say that we're doing development almost in every part of Lagos, in almost all local governments, that we have, and in front of your chamber is not an exception. Adeola, Idowu-Taylor, Adeyemo Alakija, Adeola, Hopewell, and you have seen it. There's in less than 3 years we've had a massive facelift, in this corridor. And so as we're feeling the top tier of our economy, the Victoria Island and the Ikoyis, of this world, you can see all of the developments that is happening. We are not leaving it to this part of the city alone, on Lagos-Badagry, we're almost completing, a very difficult part of it. This was a road that was 4 lanes, and we've pushed it to 10 lanes, So it's really been a very tough line. And so we have pushed that road to a place called Okokomaiko. We're finishing that by the end of this year. And federal government, thankfully, also have taken part of it, and they're moving further down towards Badagry. That is a gateway that is West African International Gateway, and it's a road that we believe that we should not leave. Lagos State took the initiative a couple of years back, and we're audacious at that time to say that we're going to build, that road. Federal government should catch us up somewhere.
Meanwhile, the Nigerian Association of Liquefied Petroleum Gas Marketers have blamed portfolio investors for the high cost of cooking gas. The president of the association, Olodakpo Olatobosun, said when he appeared at a committee of the House of Representatives investigating the prices of diesel and gas, Mr. Olatobosun says that the government, through the NLG, has been injecting sufficient gas into the market, but middlemen who are aiming to maximize profit are responsible for the steep price. Findings indicate that NLG, although the company has supplied all its products into the Nigerian market, but it only meets half of local needs. The rest is imported, which is currently being affected by global oil crisis. Outside Nigeria, natural gas has started flowing from Spain towards Morocco through a pipeline that stopped flowing in November amid a diplomatic row between Morocco and Algeria. Algeria decided last year not to extend the deal to export gas through a pipeline running through neighboring Morocco to Spain, halting nearly all of Morocco's gas supply as relations between Rabat and Algiers worsened. In April, Algeria warned Madrid not to re-export Algerian gas supplies to its southern neighbor after energy minister confirmed plans to reverse the flow of the Maghreb-Europe pipeline and begin exportation of natural gas to Morocco. Well, let's leave the oil and gas area for a while now. Continued cattle rustling activities along Zimbabwe and Botswana borders are baffling and railing authorities despite intensive joint police operations to curb the vice. Recently, the two countries formed a Zimbabwe-Botswana Bi-National Commission to collaborate efforts to curb cattle rustling activities along the two nations' common border. Report from Botswana states that even though the Botswana Police Service arrests suspected cattle rustlers through its anti-theft operation, the country has continued to experience livestock theft along its border. The World Bank Board of Executive Directors has announced its approval of a $500 million loan to back Egypt's social protection net and food security in the face of the impact of the Russian-Ukraine war. The loan will be dedicated to executing the new emergency food security and resilience support project. The loan will support Egypt by mobilizing immediate short-term relief to address supply and price shocks, while simultaneously bolstering Egypt's longer-term food security strategy and improve nutrition for the poor and vulnerable. Moreover, it aims to support the country's efforts to ensure that poor and vulnerable households have uninterrupted access to bread, strengthen Egypt's resilience to food crisis, and support reforms in food security policies to improve nutritional outcomes. And Egypt's Petrojet has returned to resume its work in the Libyan oil sector after 11 years. The Libya's National Oil Corporation has confirmed this, that according to the president, that maintenance and projects department have confirmed to reopen the company's headquarters in Libya. NOC Chairman Mustafa Sanala highlighted the corporation's desire to involve Petrojet to contribute the completion of huge projects within the available capabilities. It's been briefed on the ambitious project and promising plans that the corporation seeks to implement, despite the problems of closures and lack of funding. The most notable plans that NOC aims for is the maintenance of dilapidated infrastructure, the warehouses of a burger company, and the rehabilitation of destroyed fields. Petrojet aims to participate in South refinery projects, compilation, and expressing the company's desire to harness their capabilities and expertise to accomplish future joint projects. That's the program for today. Thank you so much for being a part of it. We'll do it again tomorrow. I'm Amy John Mekwa.